Hi, how's everyone doing? My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. Welcome to the Masterclass series. This is the place where we dive deeper into TradeStation's technology to make sure that we can use the full potential of what we have here on the TradeStation desktop. So, welcome everyone. Today we're going to talk about strategy trading specifically, take a look at some of the reports that are available in the strategy performance report and see how we can utilize some of the metrics there to gauge the performance of our strategies. But before we get started, let me just point out that the chat is open. You're welcome to communicate with me there. Good morning, everyone. I see that we have an active chat. John, nice to see you. He's from Phoenix. By the way, I'm broadcasting from the city of Houston in Texas. So welcome, everyone. All right, Jim. Welcome to class 2. All right, so everyone is sharing their locations. Thank you so much for taking time out of your schedules and being here, and learn a little bit about the TradeStation technology. Before we get started, the usual disclosure, just keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. We want to make sure that everyone knows that active trading is not suitable for everyone, and that past historical performance is no guarantee of future results. And we want to emphasize that, especially in these classes where we're looking at a strategy and we're looking at performance report, that is in no case a guarantee of what will happen in the future. We have additional disclosures here for anybody that wants more detail. You can go to www.tradestation.com/important-information. All right. Excellent. Welcome everyone to class. So let's go ahead and get started. There is a PDF that I'm sharing with everyone here in class. Let me share it the first time, and then I'm going to rely on Manolo to share it with everyone here as well as we go along and anybody asks for it. But it's a PDF that has the information that I'm going to share with you here on screen. So yes, we're going to talk about the strategy performance report, and we're going to concentrate on graphs. All the graphs that are associated with analyzing a strategy's performance and see some of the values there and see how they're calculated, where they come from, have a full understanding of the graph so that we can utilize it to gauge our strategy's performance. So let's go ahead and get started with some definitions. There's 2 groups when you bring up the strategy performance report. You have a tab for the performance graphs, and you have another tab for the trade graphs. So each one have their own, characteristics. The performance graphs takes a look at the overall strategy's performance. So this is where you find the usual graphs that you would want to take a look at, like equity curve lines, profit and loss by month. Things like that are found in the performance graphs. Now, when you want to drill down deeper into specific trades, then we have the trade graphs. We have scatter graphs, we have P&L graphs for all the trades, we have drawdown analysis, run-up analysis, so all sorts of things to kind of have an understanding on how the strategy is behaving and how the trades are reacting to market data. So let's start off with the first one, which is the equity curve line. This is the first one you see when you go to the performance graph tab, and it's a very simple graph to understand. I have a standard definition here for each one of the graphs. We're not going to read these word by word, but an equity curve line, or the first graph we're going to take a look at, looks at the P&L that is accumulated from trade close to trade close. So every time that you close out of a trade, whatever profit or loss is made on that trade gets added to this cumulative equity curve line. And this is what you see in a graph. Let me switch over here to my TradeStation platform. So we're going to do a little bit of a back and forth between the PowerPoint and the TradeStation platform so that we know how to access these graphs and how to take advantage of them. So let me switch over to my desktop. Okay, on this particular example, I'm looking at a daily chart of Ford. You can see the symbol right here on the top left corner. I have loaded 5 years of historical data, and I have applied the MACD strategy. Pretty straightforward, nothing fancy, nothing custom, things that you can find on your own platform. If you are asking how to add the strategy, just go to studies, add strategies, and we added the two MACDs, the one that generates the long entries and the one that generates the short entries. When you combine a long entry with a short entry strategy, they're gonna reverse each other. So if you're in a long trade and the short side generates a trade, it's going to get you out of the long and take you short. And vice versa. If you are in a short position and the long signal gets generated, it's going to cover your short position in order to take you long. So it's a reversal strategy. You're always in the market. And this is exactly what we see here on this chart. I have 5 years of historical data. Let me just make sure that I have that. I'm going to go here to the very first bar of this chart, and it tells me that I am on July 18th, 2018. So exactly 5 years. By default, if you go to a daily chart, it's going to give you 2 years of historical data, but we all know that we can request more. In this case, I've requested 3 additional historical years, and they've been added to my chart. So I have my strategy already running. You can see all my signals being generated historically. So I can see every time that the MACD would have generated a long trade or a short trade. And then once you have the strategy in place, then you can pull up what we call the strategy performance report. That's going to be available right here on the data tab. So, backtesting a strategy, it's something very straightforward and very simple to do. All you need to do is pull up a chart, adjust the time frame if you need to. Think about how much history you have on the chart, and then just insert the strategy. That's all you need to do. And once you have the signals on the chart, you pull up the strategy performance report, and this is how the backtest starts, okay? All right, so I'm already on the trade graphs, but I'm gonna go here to the performance summary because this is where the report really brings you. Now, my report is maximized. Usually when you pull up the report, it's like this, like a floating window. I tend to maximize mine and sometimes restore it depending on what is it that I'm looking at. Since we're looking at graphs and some of the detail is very minute, I like to maximize so we can see it better on the screen. So from a general standpoint, this strategy is not crazy bad. It's not crazy good either, but it's a profitable strategy. And I'm not sure about making $1,700 in 5 years. That seems like it's very little. But again, this is just a sample strategy. We're only trading 100 shares, and this is Ford. So you can just imagine, back in the year 2018, Ford was $8. How much is Ford right now? It's $14. So it's a cheap stock, and that's why the profits and losses are not as, it's because of the quantity of shares we're trading. 100 shares, the stock would have to move $1 for you to make $100, right? So let's go back here to the performance graphs. And in the performance graphs, this is where I find my equity curve line. All right. Let me see which looks better. Does this look better than this? All right, this is full screen. We'll keep it full screen. It's a little challenging because some of the things that I wanted to point out here in this graph are some little green dots. I'm not sure if you can make them out from your side, but there are some green dots over this line. If you were following this same example on your TradeStation platform, maybe they'll be a little bit more visible. In fact, when I use the smaller size, I think I'm able to see the dots a little bit more clear. I wish this is something that you can submit as an enhancement request. I wish I had the ability to increase, the thickness or the size of the dots. These graphs are not very customizable. They are what they are, but they should look sharper and more clear on your side than on a Zoom webinar. Okay, so this is my equity curve line. And as I said earlier, it's going to start at the very beginning here on the left-hand side and monitor my P&L trade by trade. I can click on the background and hover over the line just to get a little bit more detail on the trades that were generated. So here's my trade number 1, generated on October 29th, 2018. And when the trade closed, I had a loss of $23. That's how my strategy started. Not a good start, but not a huge loss. But that gets reflected right here on my graph, you know? So $23. Second trade happened November 19th. We're not going to do every single trade here, so don't get scared. But I just wanted to let you know that this is cumulative equity. So depending on what the trade does, then we have the second trade, we have our equity is $57 loss. It doesn't mean that the second trade lost $57, is that by the second trade, our equity was a loss of $57. This also tells you, how the strategy started off. This is not a good strategy the very first few weeks of the test. It wasn't until, March of the year 2020, that's over a year of trading, that the strategy actually went to the positive side. So this is pretty cool because, at the very beginning, we started saying when we were looking at the performance summary, that the strategy is not crazy bad. However, when you look at a graph like this and you figure out that it wasn't until trade number 27 that you were able to go into the positive side, that any trader would not tolerate, this long period of losing trades and still stuck to the strategy. Anybody would have just given up on this idea, thinking that the strategy was not going to take off or generate any profits. The losses were not that major, but there's only a certain amount of trades that you can tolerate before you give up on any idea. And this could be one of those situations, because it took over a year for you to, realize that the strategy was going to pick up and then go to the positive side. So yes, looking at the graphs does give you a little bit more understanding on how the strategy is behaving and what has happened historically that could happen again going forward. So the behavior of this strategy is that for 27 trades, it didn't give you any profits. That is something that could happen again. I mean, it could not happen, but it could happen. And those are things that we need to make sure that we are aware of, and that as a trader, we're ready to expect. Okay. This line is also, as I said at the very beginning, accompanied by these green dots. Every time that you see a green dot on the line, it means that it's reached a new equity peak. That's like a new high, pretty much. And that's what you want to see. You want to see a lot of green dots because you want your equity to increase. You don't want to have a strategy that just breaks even. You want to make sure that every so often you get a new peak and your equity continues to increase. So this is a very basic performance graph, and it tells you in which direction the strategy is trading. So what we're looking for is a steady, a steady angle on our equity curve line. Usually, a 45-degree angle or a 30-degree angle is good. But again, it's hard to achieve. And this gives you a clear understanding on how the strategy is behaving historically. Okay. Question from John. Did you keep the same strategy throughout this entire 5-year period? And this back test, yes, is absolutely the same strategy. We're talking about the MACD and the MACD only. No risk management, no stop losses, no profit targets. This is just the MACD going back and forth, going long and short. So yes, it's the same strategy on the 5-year back test. So let's go ahead and take a look at the next graph. The next graph, let me go here to the PowerPoint. The next graph is similar. It's called the equity curve detailed graph. And the difference between this one and the other one, that instead of just giving you your P&L from closed trade to closed trade, here you see the details or the P&L from the close of every single bar of the historical chart. Pretty cool, because now you have a little bit more visibility into where the drawdown is. The first one, this one right here, is just from closed trade to closed trade. So you don't get that exposure you have to the markets when you have an open position, drawdown and run up. This one right here is called detailed because it does calculate your equity bar by bar. So if I go here to my performance and I go to the drop down, this is how you switch the chart. I mean, the graph. Let's go to the drop down. We're going to go to the equity curve detailed. And you can see that we have far more detail in the graph. We can see where the P&L has been historically. So if I want to compare, let's see if I can find. Maybe right here. If you look over here at this peak, towards the end of the day, I mean, not the end of the day, but the end of the backtest period, which is, recent activity, you see how this trough, it's halfway between $1,400 and $1,600, somewhere about $1,500. But if you look at the detailed graph, you can see how that drops closer to the 1,400. So we see that in the detail, we see a little bit more exposures. It means that we were in a trade at a certain point, we were closer to, 1,400 than we were to the 1,500. So there was a major drawdown right there in one of the trades. And that's represented here in the detailed graph, because rather than giving you P&L from close trade to close trade, it gives you the P&L every single bar of the historical chart. All right. But they're very similar in the way that they're represented. On my performance, on my PowerPoint, the next graph is the equity curve area. Very similar in nature. This is just different ways of representing the same thing. This is our equity curve line, just represented as an area graph. That's all that it is. So if I go back here to my desktop, I look at my detail, my equity curve area, this is going to be exactly the same as my equity curve line. Let me just choose it here. And you can see that it's exactly the same line. It's just filling in this area with black. So keep a visual picture of this line. I'm going to switch it here to the area, and it's exactly the same. It does go inverse when it goes to the negative side. So you can see the negative area that we pointed out at the beginning of our back test, but everything just gives you a different graph of the same line. Equity curve underwater, there's two of them. We have a monthly calculation, and then we have a weekly calculation. On a historical back test that is 5 years in time, but the monthly, let's just look at the monthly for a moment, because this is not going to accumulate, it does give you the 5 years. I was just going to say, I was going to say something that wasn't accurate. I was going to say that it doesn't give you the 5 years, but it does give you the 5 years. But this is just a monthly representation of where the equity has been. Every time that you see a black box, that means that your equity reached a new high that month, and I can click and hold and see the details here, So let's see. These numbers right here, because you can see how the equity. Oh, I see what's happening here. I was asking myself, why does my equity, start off? Why is it 100,000? This is not what I see on my equity curve line. Let me go here on this very first period. 996. All right. If you guys remember, there is a starting point for every strategy. And this is the value that everyone provides when you're doing a historical backtest. Let me put my graph here. And I go into my strategy settings. I'm going to click here on this button that says properties for all. You see this little box that says initial capital. There are some calculations in the strategy performance report where this value is used. It's not used in the strategy's, ability to generate signals. The strategy will always assume that you have enough money in your account to submit a trade. But there are some metrics or some calculations inside the report that used this starting point of 100,000, not used in the running of the strategy, used in the report only. I want to emphasize that. And this graph is one of those places where we see a reference to that initial capital. If I were to change this and say, I'm going to start off with 10,000 instead, I'm going to click OK and OK. Now, let's look at the report. This is the same report, but now if I click on hold, you can see that my equity is in reference to that starting point of 10,000. And it does give me pretty much a reference to where my equity is at the end of the backtest. You can see that the end of the backtest, my equity is about 11,743, which is in line with what we saw in the summary. In the summary, we saw how the strategy makes about, I think it was $1,600 that we saw $1,700. So we add on to our initial capital, and that's the value that you see here. But what I wanted to point out here, which this graph looks a little bit more like Halloweenish, you know, because of the I always think about blood when I look at this graph, but it's pretty much showing you the drawdown impact, and you can see the legend right here on the right hand side. It says the equity drawdown. So what it wants to emphasize is that even though you are making new peaks in your equity, this gives you the magnitude of your drawdown, how far down your equity is going, because that'll give you a different perspective of the strategy. Now, a lot of times we are focused on how much my strategy is making. And it's very important that we understand that those profits come along with drawdown. And we have to make sure that our drawdown, it's something that we can tolerate and is a risk that we can take in our accounts. In this particular case, we see the magnitude of this drawdown expressed as a percentage. Now, this is on a monthly period. If you go here to the dropdown, we can do it on a weekly, which gives us a little bit more detail as to where our peaks are and how much drawdown there was. So, for example, take a look at right here. At one point, if we hover over here, our equity was 11,871. From that peak, if we go over here to this trough right here, you can see that it dropped to 11,551. So we dropped about $300 in our equity, which is about almost a 4% of percentage drawdown. So it's pretty cool that we can see that information here to see if that's something that we can tolerate during our strategy trading. Okay, let's go back here to my report. So we looked at the equity curve underwater, and this is the equity curve underwater on a weekly time period. You can see that the definition here gives you a little bit more detail about what it does. Now let's take a look at performance graphs. We have a monthly, and then we have a monthly accumulative net profit. Let's take a look at those two right here on my TradeStation. All right, so we have a monthly net profit. Again, starts from the beginning of the historical backtest, and it just gives you month by month if the strategy was a profitable month or not. Again, if you want to break up your profits into monthly periods, it just gives you a good understanding on how the strategy is behaving by the end of the month. So these are P&L by periods. At the very beginning, we saw it from trade close to trade close. We also saw it on a per bar basis. Here, we're seeing the P&L on a monthly basis, which is also a great analysis. That's our monthly net profit. And then we have the cumulative net profit, which means that it's going to take those profits and losses that you saw earlier, and it's just going to keep track of them and add them on top of each other until we get similar to an equity curve line that we saw at the beginning, but this is more like a monthly equity curve line. So you see the very first value that we see on the far left is October 2018. The next value is November 2018. So it does give you what the P&L was at the end of the day, not the P&L. This is the equity curve line. So one gives you the P&L, the other one gives you the cumulative P&L. If you want to look at the specific month, I see the question here from John. I mean, you look at the graphs pretty much. I mean, if you want to go back into the chart and take a look at what was happening that month, you know, for example, if we want to take a look at this peak right here of 453, this happened in June of 2020. You do have to do a kind of a manual search for June 2020, and maybe draw some vertical lines so you can see what happened during the month of June. But from the month of May, we were at 258, we jumped to 453. So we jumped about $200 from one month to the next. So what happened in May? What happened in June of 2020? For that, we have to go back here to the chart. Let me bring this down. And I see my time scale right here at the bottom. You can see the beginning of 2023 down there. I'm just going to scroll back to 2020. All right, here's 2020. Everybody see 2020 around here? And I see June right here. So I'm going to draw a vertical line, drawing, vertical line. I'm going to click. I'm going to drag it to the end or the beginning of June right here. This is June 1st. Okay, that's my first vertical line. I'm going to draw another one, vertical line, and I'm going to do it at the end of June. There we go. So those two vertical lines are what's happening right here in June. Let me draw another one, vertical line at the beginning of May. Okay, that's the beginning of May. I mean, I know that we are in the middle of a winning trade. There's just one single trade that started right here back in March 26th, the end of March, and the same trade extended all the way up until here, June. So the way that the performance report distributes this P&L is by month. So whatever amount of money is made on each month, that's exactly what you see in the report or the cumulative report month by month. So what we see here is this: from the trade originated in March, but then you see a little bit of profit here on 4/20, on 5/20/20, and then on 6/20/20. So that profit for that single trade is what accounts for all these new peaks that we see in our equity. No, and this particular graph is not a trade per dot. When we were looking at the, let's go back to the report. On this report right here, every dot is every month. Remember, this is a monthly cumulative net profit. If you want to see a trade by trade, you go to the equity curve line. So here in the drop down is the very top one. The equity curve line is the one that goes from trade to trade. In here, yes, every single dot or every single change in the line represents a trade. In the monthly cumulative net profit, which is the one we're looking at, every dot is every month. So it calculates the P&L at the end of every month. And lastly, average profit by month. This is kind of a cool a cool graph because it takes all the Januaries and combines them together. Remember, we have 5 years of historical data. In this particular case, I'm not sure if that gives us a total of 5 Januaries. Well, however number of Januaries we have, it's going to take the P&L of all those Januaries and combine them together. So in January, average, we have about close to $20 profit. Now, this is net profit P&L. Remember, this is an average. So it's some Januaries may have lost money, some of them may have made money, and this is just an average. But it does give you a sense of when the strategy is doing better. Maybe give you a sense of seasonality. You know, maybe in the summer, you know, the strategy does well, but in the winter months, it doesn't. I don't see any correlation on this particular strategy or the MACD working on Ford. But, you know, if you have a strategy that is applied to a stock or an ETF or a futures that is sensitive to the seasons, then it may be very interesting to look at a seasonality graph like this and see how the strategy is behaving in average on particular months. Okay, so it seems like this particular strategy, March, April, and August were not good months to trade. And again, we're also looking at trades that may include several months. You know, we were just talking about a trade that started in March and it was exited in June. So you can see that it's hard to split that trade into specific months. If we were going to tweak the strategy, you know, we can see the P&L on a month by month basis, but when it comes to, you know, tweaking the trade, what do we do to it? Do we stop the trade, you know, in April? Could we have exited, you know, in May and then entered again the beginning of June? You know, whatever the situation is, the good thing is that you have a lot of information about what the strategy is doing and when is it doing it, okay? All right, so let's go ahead and take a look. These are all my performance graphs, you know? It does give you a good sense of what the strategy is doing, not only on a trade by trade basis, but also on a bar by bar basis and on a period basis. We saw monthly reports and we saw weekly reports. We also need to pay attention to drawdown, and this one right here, which is the equity curve underwater. Underwater meaning that you are from a peak going underwater because you are in a drawdown period based on equity. And that's a period that you want to get out of. You know, once you're underwater because you're at a lower point than you were before, you want to make sure that you come up soon. So those type of reports just give you a sense of how long did the strategy take for me to come up from that underwater situation. I don't want to be underwater. I want to be above here. I want to have as many little black boxes as this graph can. This graph is not showing me run up. No, the black is just letting me know that I've come above water. But anytime you see red, you're underwater, and that's not a situation where a trader wants to be. Let's take a look at our trade graphs because we have a few to talk about. So we talked about the average profit by month, good graph. Now let's talk about trade graphs. This is total efficiency. There's three graphs that I want to, you know, group together: total efficiency, entry efficiency, and exit efficiency. These are all graphs that measure how good the strategy is doing when it's time to enter and exit the trade. Of course, the total efficiency, this one right here, combines the entry and the exit, and it gives you an overall efficiency for the trade. But if you want to drill down into entries and exits, then you have an efficiency graph for the entry and you have an efficiency graph for the exits. But you can see how the graphs look very similar. So let's go ahead and try to understand what this is trying to tell us. Let me go back here to my TradeStation. For the trade graphs, you have to go to a different tab. So we already looked at the performance graphs. Now we're going to take a look at the trade graphs. And in the trade graphs, I'm going to go to here to the very top one, total efficiency. So hopefully you can see the dots here. The dots do represent every single trade in the historical backtest. How many trades do we have? In the summary, before we look at any particular dot in here, but in the summary, it does tell you total number of trades right here. There's 88 total number of trades in the past 5 years. So when I go here to the trade graphs and I go to the total efficiency graph, I can see those 88 trades right here. See the x-axis here on this graph is the trade number. If I look at the very last little dot here on my graph, if I click and hold over it, you can see that it says trade number 88. So it does give you a graph of every single trade that happened in your historical backtest. Now, and you see here a percentage scale on the left-hand side, which is efficiency. You know, you have a positive efficiency and you have negative efficiency. Of course, negative is any trade that would have generated a loss, and a positive efficiency is, of course, any trade that would have generated a profit. Now, how is this calculated? Well, let's take a look at the very first trade on this historical backtest as an example. I'm going to come over here, and the first trade, trade number 1, happened October 4th, 2018. And we stayed on that trade until October 20. I'm just reading right here from this yellow box. We stayed on that trade until October 29th of 2018. So it was, several days of, being on that trade. The efficiency on this trade was negative 19%. By the way, it does give you the average. The average for my historical backtest is a negative 17.59. So not good. Not good in terms of trading efficiency. We know that the strategy performance report still on the positive side. I'm able to capture some money, but I could have captured more. This is pretty much what that's saying. The efficiency and the way that the strategy gets in and out, it's not optimal. Let's take a look at the first trade. So we did say that October 4th, 2018. I'm going to come here to the back of my chart. Let's take a look at the very first trade right here. There we go. October 4th, 2018. We see that the strategy generated a short trade. Now we can already see the place where it generated the trade. So the way that efficiency is calculated, it looks from the time that you entered the trade to the time that it exited the trade. And it looks at all the prices in between, your entry and your exit. If it finds that you could have entered at a better price, of course, that's going to affect your efficiency. If the strategy gets in at a price or at the best price possible, that is 100% efficiency. If it gets in at the worst price possible, that is 0% efficiency. So that's exactly how efficiency is calculated. I'm going to look at the time that I entered to the time that I exited. I exited right here on October 29th. And that is not a good place to enter the trade. Of course, I would have, the exit was all wrong. This exit should have been down here. If I wanted to make this a profitable trade, I would have exited down here. That was the best price possible, but it exited up here. So the efficiency, it's really bad. The entry, so now it comes to, splitting up the trade. Overall, the efficiency on this trade is a negative 19%. But let's take a look at the entry and the exit efficiency just to have a little bit better understanding on that specific trade. And the way that I do that is I go over here to my graphs and I select entry efficiency and I look at that very first trade. Here's trade number 1. And you can see that the entry efficiency is 80.67. Not bad. We have an entry efficiency of 80%. Why? Because if you look at all the prices from here to here, we did get in at a good price. On a short trade, you want to make sure that you get you get a price that is the highest possible. And if you look at all the prices in between, we kind of did go and enter at a good price, 80% efficiency. But if you go to the exit, which is the really messed up part of this particular trade, is the exit. Let's take a look at trade number 1. And you can see that the efficiency percent is 0. Why? Because it did get out at the worst possible price. It had all these other opportunities to get out and it didn't get out. I know that, that's no fault of the strategy, where it is the fault of the strategy. It's just the MACD was not able to capture that trade right there. So now it's a matter of you as a developer of the strategy to go in there and find out ways in which you can maybe capture price movements like that. If you are in a short trade and you have a significant price drop like this, maybe don't wait until the MACD generates the opposite long trade. Maybe have a way of capturing those profits, which is a way to manage, your risk. So that's the way that I would use, the efficiency trades. You look at the entry efficiency combined with the exit efficiency, and that gives you a good measure on how your trades are behaving. So on the entry efficiency, we have an average. Our average is 51%, right in the middle. And for the exit efficiency, we are down here at about 30%. So the strategy needs improvement, and it needs more improvement on the exits than it does on the entries. So that's another thing that we understand about the strategy behavior when we look at a graph like this. Our entries are not so bad, 50% efficiency, but our exits are at a 30%, so they need to come up. Interesting. So let's go over here and take a look at a trade that had a 100% exit efficiency right here. This is an exit efficiency of 100%. This is trade number 12, happened on March 27th, 2019. So a little bit further, let's go scroll here. So March 27th, right here. So we're talking about this trade right here. Okay, let me bring my chart a little bit lower so we can see it better. Okay, so this is March 27th, and it's exited up here on April 26th. Yep, March 27th to April 26th. You guys see the exit? Was able to capture that big gap right here on this bar. And as soon as it opened, it exited the trade. That was the best price possible that it could have exited at. Now, that's the reason why you get a 100% on that exit. And I find it very interesting for me to be able to drill down and look at a specific trade and give me, a sort of a performance score on the actual trade. The next three, we have total trades. I'm also going to combine them because there's three that are related. Total trades, you have total trades, you have winning trades and losing trades. Okay, let's take those three together because they're very similar. And let's see what it's trying to tell us. Let's total trades. Let's go over here to my back test and let's go here to total trades. In the total trades, I'm just going to resize this just a tad bit bigger so we can still scroll through the chart. So again, this is giving me a graph of all different trades, the total 88 trades that happened on my historical backtest. There is a blue right here on the very front right side of the graph, which is my open position. So my open position or my open trade is colored in blue. It tells you open trade right there. And it's also identifying outliers. Now, whenever you have a loss or a win that is outside of normal, then it's labeled as an outlier. So we have a losing trade right here that lost, close to $300. Let's see, how much did it lose? Yeah, $288, almost $300, but it's totally separate from all the other losses. And the same here, we have all the different winning trades and how much each one of those trades win. So the scatter graph does tell you, where's the concentration of trades. And this blue line, of course, gives you the average. Average per trade, $19.74 profits. So you see the individual P&L of each one of the trades and the average, and how far away are some of these trades from the average. Let's give you a good understanding on the variability of this strategy. What you want is some consistency. Now, you don't want, of course, the majority of the trades are going to be close to the average, but you don't want the strategy performance to rely on just one or two or a few trades up here or down here. You want to make sure that you have a good scatter of different trades in this graph so that there's consistency of profits across the board. And that's total. If I go to the winning trades, of course, it's just going to give me every trade that was profitable. But it breaks it down. It gives me an average winning trade. So all the winning trades, if you average them together, we have 144 average. And again, you can see how all those trades relate to that average and how far are they from that average. Again, going back to that concept of consistency. And you have the same for the losing trades. All the losing trades are here. This is the one that was labeled as an outlier, the one that lost 288, close to $300. And the majority are going to be around the average, which in this case is about $49 per trade. Then we have a few graphs. We have the drawdown and drawdown P&L. Let's take a look at these because this is an interesting graph. Trade graph, drawdown. Okay, so what this graph tells us is how much drawdown each one of the trades had, even the profitable ones, because profitable trades, of course, that could have been drawdown in the life of that trade. Our very first trade, which we looked at at the very beginning of the historical backtest, had a drawdown of $23, but it also had a loss of $23. So a lot of these are going to be trades that were exited right at the maximum drawdown, but not all of them. This one right here, the one that has the largest loss, also exited at its largest drawdown, which is 288. But a few of them, let's go ahead and take a look at a profitable trade. I'm going to go here to my winning trades. Let's go ahead and grab this trade number 61, which is a profitable trade. It made a profit. You can see it right there, $454. It was the largest winning trade. But I want to see what the drawdown of this trade was if I look it up on the other graph. Trade number 61. Let's look it up here on drawdown. I'm going to find trade 61. Here we go. The drawdown was $100. So you can see that this particular graph is just giving you drawdown per trade. So even though we did have a profitable outcome for trade number 61, this is giving you, how much drawdown there was on that trade, which is good to know, because if you had a very tight stop loss, let's say that you had a $100 stop loss, that would have made this winning trade a losing trade, because it did have a drawdown of 100, meaning that it at a certain point it was losing $100. And if you had had that $100 stop, it would have taken your trade out and not give the trade enough time to reach its maximum capacity, which it did. Eventually it made $454. So a lot of times you think about this and you say, well, this is where I would have avoided, a stop loss of 100 because it would have affected this or the outcome of this trade. Let's take a look at another graph, the drawdown P&L. Drawdown, we have a drawdown P&L. Okay, there's a few graphs here that I want to combine, because in addition to drawdown, let's go back here to drawdown. We already explained what drawdown is, but we have also run up. So I'm going to skip a few. So from drawdown, I'm going to go to run up. Run up is the exact same graph, but giving you how much potential or how much our profits went up before they were realized. Let's go to trade 61 because we already know what the potential here. Look at the run up of trade 61. The run up of trade 61 is 592. So at a certain point in the life of trade 61, we were already close to $600, but the trade did not capture those 592. It actually came down to 454. So the same behavior that we see on the drawdown, we also see it on the run up. It does allow us to see, are we able to capture those run ups in an efficient way? The same happens on the drawdown. Are we being stopped too soon? Maybe our stop loss is too tight. Graphs like this allow us to look at where the trades are, how much the run up or the drawdown is, so that we can set appropriate profit targets and stop losses without affecting the overall profitability of the strategy. Now on the P&L side, let's go here to the drawdown P&L. This is an interesting one. This graph right here, the length of the bar tells you, where the trade profitability was before it closed. Now, a lot of these trades will give you, this is drawdown. So this will give you how far down the trade went. But it also tells you a color, which makes you, separate the winning trades from the losing trades. So let's take a look at trade number 61, for example. On trade number 61, we have a high of 454, which is what the realized P&L was. And then it gives you the drawdown. It went all the way down to $100. So it doesn't give you the run up, it just gives you the drawdown. So one extreme of the line, in this case, the top extreme of every single bar here is how much a trade made or lost. And then the bottom part is how much or how far the trade drew down. A lot of times, we see trades like this that have a long variability in profit and loss. These are trades that, are exciting to a certain point. And it's also scary because you could have stopped down here when it was negative. We have another scenario right here on trade number 28. It was a trade that got out with a $151 profit, but at one point it had a loss of 119. So good trade to look at. This is drawdown P&L. If I go to the run-up P&L, very similar, but in this case, it's the opposite. It's giving you how far up the trade went before you exited. So let's take a look at one of these long lines right here. Trade number 60. Trade number 60 was a losing trade and it lost $64, but it went all the way up to $335. It's interesting and a little bit, disconcerting, because why wasn't the strategy able to capture some of that profit that it had made? This is trade number 60, entered January 4th, 2022. Let's look it up. January 2022, we said, right? Okay, so let's reset the scale because I don't see my graph. All right, and there we go. And then we go back to January. Oh, there we go. So this is the trade right here that we are discussing, this long entry. Look where it exited, down here. It was a losing trade. It wasn't able to capture this up movement. So at a certain point, this trade was making over $300, and we just gave all that back into the market and exited down here, making it a losing trade. Again, things like that, you're able to identify specific scenarios where you think and you say, maybe I should go into the strategy, tweak it, just so that I can avoid that, right? Okay, so we're running out of time. I'm sorry, this is taking a little bit longer than I expected, but the other two graphs, let me see if I can give you a little bit of, we went through this, that maximum adverse and maximum favorable. So these four are the last four in the pack, and they also give you an overall view of all the trades. And one is giving you the adverse situation and how much money they or the drawdown in the situation, and the other is going to pretty much be a run up and give you the situation. It's a more combined graph though. Let me give you, for example, the adverse excursion. This combines all losing and winning trades, and you can clearly see the winning trades because they're green, and you can also see the losing trades because they're red. But it also gives you the drawdown. And this is a cool graph because you have profit and loss on one side and you have drawdown on the other. So if you look at a trade like this, I'm going to take a look at this one on the right side, which stands out, and I'm going to click here and take a look. This is trade number 59. So the profit and loss was 288. That's why it's close to the 300 mark right here, but it's also close to this mark right here. So not a good example because it was a losing trade and it drew down, the maximum that it lost. So it's pretty much right there. But let's take a look at, let's take a look at this one. Trade number 73. it was a winning trade. And if I click here, I can see how its profit was 361. But at a certain moment, it was losing 100 because this is drawdown. So that's where it scatters the graph, takes into account if it was profit or loss and how much it drew down. So this graph is very helpful at setting stop losses or trailing stops because you have a way of keeping in mind other trades so that you don't put in a stop that is too tight. For example, if I were to put in a stop loss at 100 right here, that means that this trade or any trade that is past that line would have turned it into a negative or a losing $100 trade. So this trade right here, which was a profit of 151, would have turned it into a negative $100 loss. The same with this trade up here. Since it had a drawdown of $101, it would have hit our stop and it wouldn't have been able to reach the 361 that it made. This one right here is right on the borderline. Again, it had a drawdown of 100. A $100 stop would have exited the trade and not give it enough time to reach the 454 potential. So $100 would not be a good stop loss for this particular trade. That type of things, you're able to identify by looking at these graphs and be able to, okay, where do I position my stop loss so it doesn't affect other trades, Of course, if we set it somewhere here at about 150 or 130, then all these trades that lost, so much would probably have been stopped at 120 or $130. Unfortunately, I wanted to give you some tests and show them to you here on the screen, but I guess I spent too much time explaining the first graphs. And of course, you have the favorable one, which is instead of showing you drawdown, it shows you run up. How much run up the trade had before it turned into a profitable or a losing trade. And you can see that graph here. Okay. So hopefully you guys walk away with a little bit of information about the graphs and a little bit of understanding on how they're created and what they represent. Because a lot of times we look at these graphs and we sit there and we're trying to figure out, what is this trying to tell me? And the purpose of this class is precisely that, just to give you a little bit of information behind the technology and how these graphs can be applied in developing a strategy. So thank you guys for joining me today. Thank you for supporting the TradeStation Masterclass, and I hope that I can see you in a future class. Tomorrow, we're going to have our Getting Started class at 10 a.m. in the morning. That's 10 a.m. Eastern time. And we're going to open up the floor for Q&A. If anybody has any questions on the TradeStation platform or any topics that you'd like to discuss, it's a great opportunity to do that. But I want to say thank you guys for joining me today. Have a wonderful afternoon, and I'll see you guys on my next class. Goodbye, everyone.